Hey guys, welcome. I've got a video here this week on another drone company. I did one last week on a company called Drone Delivery Canada, and they had a pretty cool story. Very interesting company. You should check out that video if you haven't already. And this week I want to explore a company that's very similar. They're a company called Draganfly, and they're similar in that they're present here in Canada. They're a small Canadian company that is into drones, but surprisingly their business is very, very different than Drone Delivery Canada. So I think there's a very different story to explore here. There's a different investment opportunity. There's a different market. So what I'd like to do here is put together a bull and a bear case, kind of explore the good things and the bad things about this company. At the end, I'll give you a bit of a comparison to Drone Delivery Canada and tell you why I think they're so different. And overall, tell you what I think of the investment opportunity here. So let's get into it. So really the first thing to talk about here, I think, is the catalyst that these guys are experiencing and really that all of these smaller drone-based companies in North America are seeing. And it has to do with the fact of the drone securities laws are changing as the US government looks to push these Chinese companies out. You know, the idea here is that data, especially gathered by drone, is considered fairly strategic. There's a lot of privacy concerns and all that kind of thing. So the US government is trying to push the Chinese companies out of that particular market. It's opening up a vacuum, a bit of an opportunity that these smaller companies can then capitalize on. So, you know, when this happened a few months ago, suddenly the market dynamics for these companies changed a lot. And I think the total addressable market really opened up with the dominant players like DJI suddenly pushed out. And these companies are now in a position to rush in and fill that vacuum. I think that's a particular catalyst for this company, for Draganfly, because more than a lot of other companies, they're very specifically into this business of gathering data by drone and then adding on value add data analytics on top of that. And really, you know, prior to that point, DJI was absolutely in that space and they were, you know, poised to only grow more into that market. The fact that they're closed out now is a really, really unique catalyst here for Draganfly. So that said, what's Draganfly? So Draganfly, like I said, is a small Canadian company. They trade on the Canadian Securities Exchange. The ticker there is DFLY, DFLY, and you can buy them over the counter in the US, DFLYF, DFLYF. So these guys are a little bit new to the public markets. They went public back in 2019, but they've been around for a long, long time. They have a history going all the way back to 1998. And so, you know, they have deep expertise in drones because that's what they were doing back in 1998, if you can believe it. And so they have tons and tons of historical firsts under their belt. You know, they even have a drone in the Smithsonian right now because these guys have been doing it longer than pretty much anybody else. They're a cool company too from a technology standpoint. When you look at all the various drone models that they have, you know, they're not just into flight-based drones. They actually have a ground-based drone. It's called the Dragon Scout. This thing can climb stairs, it can navigate obstacles, it can run around, you know, you name it. And even in the flight space, they actually have different models for different purposes. They have a fixed-wing drone, which is a little bit unusual, and that one's really, really unique at these long-distance flights, right? So it's highly efficient. They have solar capabilities on their drones for in-flight recharging. So really, really deep expertise on drone technology for these guys.
What's the upside potential?
Okay, so let's build a bull case on this company. First off, I think you have to look at the fact that they have really healthy, diversified revenue streams. And so they talk about 5 different ways that they make money here. So number one is the hardware business. And really the hardware business for these guys is not just about selling drones. It's also about developing and selling specialized sensors that go on the drones. And I think that's really where a lot of the revenue has come from and will continue to come from even into the future, is these highly specialized sensors that line up with the specialized use cases that they're selling into individual markets here with. Second stream is contract services like mapping for various industries, right? So there's a lot of demand from insurance companies and all kinds of other industrial applications for monitoring, especially in remote areas that drones suddenly make it way more possible to keep an eye on things. The next step up from that would be data acquisition. So, you know, while you're actually operating drones in these various use cases, you're gathering a lot of data, you know, not just visual data, but LiDAR stuff and heat-based sensors and all kinds of things are gathering a lot of information. There's a revenue stream then on top of that, which is managed services. So once you get that data, there's a lot of analytics that you can then apply to it and sell additional services into a company in terms of decision support and all that kind of thing once you've gathered and analyzed a lot of that data. And finally, the last stream have here is agriculture, which is really huge all in itself. When you think about the value that drone-based monitoring, data analytics, and all that thing can bring to agriculture, in terms of insurance, in terms of monitoring crop yields, remote monitoring for remote locations and sort of these unmanned and more automated farming operations, it's absolutely huge for agriculture. So I love this idea that they have these diversified revenue streams and they have a lot of opportunities for growth, right? If a particular vertical is really good, they can aggressively expand into that market for a little while and, not suffer a hit in terms of tying off the revenue to a single line of business. The second point here is that these guys, like I said, they have deep expertise in drones, but it's not just because they've been around for a long time, even though they have, but it's also because over that timeline, they've developed a deep portfolio of patents, intellectual property, and really these are deep patents that go into a lot of very specific use cases. We're talking here about law enforcement, agriculture specific things. They have a drone actually that's capable of vertical takeoff and landing, and then in flight it can shift to a fixed wing sort of flight mode. Really, really impressive technology for these guys and a lot of intellectual property. The third point here is the total addressable market specifically for data analytics that are gathered by UAVs is really huge. There's estimates out there of about $1 trillion for data gathering and analytics by drones specifically. And right now they're executing a bit of a strategic shift away from hardware and more into data analytics, and it's because they believe that that's where that largest share is for them with respect to the total addressable market. They believe that they can capture a huge piece of that, so there's really nice alignment there. The next point here is their forecasts for revenue are looking really good. They're talking about making $50 million in 2023, which, for a tiny little company is pretty impressive, and that represents a doubling of revenue, from here to that point in time, which is really impressive, right? That's really crazy growth, and you can see the evidence of this in the pipeline, in sort of the news releases that we're seeing now as more and more companies are lining up for quotes and letters of intent and all that kind of thing. So I think they're in the early stages of developing a really healthy pipeline, and so I do believe that, yeah, they probably are capable of that kind of growth. And finally, the last point here is that they're looking to uplist on the NASDAQ, which is fantastic news. I think that people sometimes get this wrong. I think it's not the fact that suddenly they're going to uplist on the NASDAQ and a million hedge funds are going to rush in and buy the stock and it's going to go to the moon. It's not that, but what it is the fact that it's an indicator that the company is willing to take on, the overhead of being listed on the NASDAQ. It comes with tons of compliance reporting. It's a pain in the ass, but the fact that they're willing to do it in exchange for that additional growth means that management is confident in their growth vector, right? So it makes sense to them to take on that additional pain because they can then access capital markets. It's a growth driver for the company, and it gives them a lot of opportunity for additional growth to access that capital. So the fact that they see that in their future is a really, really good indicator that they believe and are confident in the growth vector go forward.
Let's talk about risk.
Okay, so let's see if we can put together a bear case for these guys. First one I think is rather obvious, and that's the fact that DJI or some of these other Chinese companies could fix the current problem they have in the US market, right? The political climate is probably not going to be constant. It's hard to say, that the administration is going to keep aggressively pushing Chinese companies out of the market in the short term. Could be. But even if they do, I think there is an opportunity for these Chinese companies to mitigate the problems, right? So if they can come out with a solution to this data privacy risk, maybe it's a third-party add-on, maybe it's third-party auditing or monitoring or whatever it is, there may be a way that they can crawl back into the US market, and if they did, that would sort of reverse this opportunity that a company like Draganfly is seeing right now. So remains to be seen if that happens. The second point I'll make here is that scaling is one thing when you're talking about a hardware-based drone company, right? It's an entirely different thing to scale a business, though, that is more oriented towards contract services, like flight advisory services and data gathering and analytics, because the thing is, that's all about engineering a solution to a specific industry vertical and then sort of staying with that customer for the long haul. It's hard to grow that business because every additional customer you take on in a different vertical, you have to staff up specialized engineering resources and all that kind of thing to meet that market demand. You don't have the same economy of scale in terms of your growth model that you do in a hardware-based business, right? Where you're just expanding a factory, you're building another factory, whatever it is. Growing in these specialized verticals is harder, and it's going to potentially slow their growth vector. And the last point I'll make here in the bear case is that, you have to question their ability to execute properly in a lot of these different verticals, right? So it requires different sales expertise, it requires different engineering expertise to solve all of these use cases, and maybe taking on too many of them for a tiny little company like this is a distraction. Can they really be good at all of these things? Can they find things that are the same across a lot of these verticals and develop sort of these core services and then leverage the small differences out into those different markets? That's what you're looking for. That's what they're looking to do. And it's really, really difficult, right? So is there ability to execute there? Don't know. Hope that it is. Okay, so what's the summary here? First, I will say that we really have to understand that these guys are not like other drone companies. If you look at Drone Delivery Canada and the video that I did there, it was all about drone delivery. Obviously, it's in the name, right? So their expertise is all about loading up drones with heavier payloads, solving the beyond visual line of sight problem, which is particularly important in residential neighborhoods. What are the logistics around getting a package to somebody's doorstep type of thing? That's really the growth vector that a company like Drone Delivery Canada is on. That's the space where the big companies are playing, right? That's the problem that Amazon is trying to solve. It's what Google is up to. This is an entirely different business, though, over here on the industrial application into things, going out and gathering data analytics and monitoring it and then selling those advanced services into companies. It's a completely, entirely different business than what some of these other companies are chasing, both big and small. So I like the uniqueness of the opportunity here for Draganfly in their market. And really, that's what the bull case is based on, right? The bull case is based all about their deep expertise being leveraged into a very specific market that is big, right? There's a sizable total addressable market here that I think these guys are really well positioned to capitalize on. So super strong bull case based on that. The bear case, on the other hand, I think is weak. The biggest thing I can point to there is their ability to scale. Smart management is probably able to overcome that particular problem, though, and I'm really actually bullish on these guys. I think we're going to see them grow really, really well into the future. It's a nice little investment in a microcap company. And there you go, guys. That's my story. Please throw the video a like. It really helps me out. Subscribe, ring the bell, and I'll see you in the next one.